Yo, what is going on, ladies and gentlemen? It's Camilo here, and what a great day we had today. We finally broke to the upside in line with what we were discussing yesterday for our bullish count and what the outlooks were going to possibly be. All right, so let's quickly dive into the analysis. Let's review what our bullish count and let's review what the long-term objectives are going to be, as well as what our short-term for tomorrow and next week will look like. All right, but before we dive into the analysis, if you're new to the channel and you're enjoying the content, please subscribe. Give me a thumbs up on this video, and don't forget to click on that notification bell so you be notified when I upload the videos. So we're going to review the SPY Qs, SMH, IWM, and the Dow. All right, now before we turn on our labels, let's quickly touch base again on our moving averages and see where we are at right the current moment. So when we spoke yesterday, right, we were looking at the 100%. I'm always saying the 100%, the 100 moving average. Okay, we closed yesterday. We were struggling to stay above it, but this morning we gapped up. However, we found rejection at the 50-day, okay, just ever so slightly, and then we were pulling back. Okay, so there's still a little bit more room to go. The bulls have a lot of work to do for us to get above the moving average, which will turn the entire wave structure bullish. Now the Qs are also within the same situation. Okay, we were struggling to stay above the 100-day period moving average. We gapped up this morning, but quickly faded into the close. All right, SMH, same deal. SMH, we're now stuck between the 100 to the 50 and the 200, but we failed to stay above the 100-day period moving average, and we faded into close. IWM, I'm liking a lot IWM and how we are here getting squeezed between all three major moving averages. All right, and the Dow attempted to break above the 50 but failed and faded into the close, but found support at the 100 moving day period moving average. All right, guys, so we're looking pretty good so far. Okay, not gonna lie, we're looking pretty good so far. You know, I know that our videos have always since yesterday, or our previous analysis, were preferring for the downside into the markets, because that's what a lot of the sentiment was displaying. Okay, we see a couple of indices, couple of stocks, couple of indicators that were pointing for the downside. But however, this morning we got this gap up and we broke the levels that we were anticipating to break to turn our wave count into the bullish interpretation. All right, so to the SPY, let's turn off our labels here and let's quickly digest and review the wave count on the daily time frame, and then we're going to move down to the 1 hour. Okay, so out of the daily time frame, from the COVID lows, okay, we went up in one primary degree wave 1, ABC pulled back into the primary degree wave 2. Okay, we're now setting the first wave here on February 12th. ABC pull back into the wave 2. Okay, 1, 2, 3, 4, and 5 to complete the intermediate wave degree wave 5, which came in at exactly 100% extension at 452.79 of wave 1 versus wave 2. We're now considering this to be the completed wave 4 pullback that we were expecting. Okay, at which point wave 5 of wave 3 should complete. Now, this trend channel here, if you guys don't know, this is an Elliott wave trend channel. We source it from the low of wave 2 across to the wave 4 to the wave 3. So it's a 2, 4, 3 trend channel that will give us an idea of where the fifth wave can come at completion. Now, the higher degree time frames here tells us that perhaps, just perhaps, if this is to be the wave count, then a 100% extension of wave 1 versus wave 2 will take us to the 526.34, and the 100% extension of wave 2 versus wave 3 for the wave 5 will take us to 522. Okay, very ambitious, but it's not out of the question. Now, down to the 1 hour time frame, let's review what the wave count looks like and what we will be looking for. Now, let me stop here real quick and let me just share something with you guys. All right, let me hide this and then we'll review this quickly. Actually, no, let me leave this here. Now, this is our bullish count, right? This is what we're looking for coming into tomorrow and the rest of the year. Okay, but there's always that, you see, as a how do I explain it to you guys? In our wave analysis, okay, it's good practice to always have two wave counts. One suggesting your primary and preferred interpretation, which is the one you are operating under, and then you have your alternate count, which is the one that you have in the event that things turn the other way. Okay, this is the reason why Elliott wave is so good, because it doesn't just make you stick to one interpretation and become this so blindly biased and just in the uptrend or the downtrend, whichever trend it is. But it gives us the idea that perhaps, you know, there is opportunity for the upside or the downside, okay, when your levels are invalidated. So let's review this real quick, and then I'm going to show you the unlikelihood, but it's still not out of the question scenario that could potentially or maybe happen. Okay, so September 2nd highs, okay, we went down in A, up in B, appropriate 618 resistance, trend channel resistance, then we went down into the C wave. Now the C wave was a bit weird, if you will, right? Why do I say weird? Because we normally want to see a C wave go at least 100% extension of the wave A. Now it's not out of the question and it's not uncommon, but it went beyond the 618, which is fine. You know, that's part of the guideline. So once we completed the wave 4 pullback of wave C here on October the 4th, yesterday we were looking at the following, right? We were looking at this as a possible, actually, well, let's backtrack here. So from October the 4th, we rallied into the highs here of 435, right? We then started to fade the following day. Now, the way we were looking at this, guys, is that we had two scenarios. If you guys remember from our bearish scenario, okay, our alternate count, we were saying two things can happen. One thing can happen in both counts. Either on the bullish count, we hold the zone between the 618 and the 786, or we continue lower into the fade, right, to break the previous lows on October the 4th. We ended up holding support between the 618 and the 786 at 428 and 429, and then today we started rallying. Okay, we gapped up. Okay, October the 6th, October the 7th, we gapped up, okay, to complete the wave 3, and now we're looking for a wave 4 pullback. All right, now what are our levels to be looking for coming into tomorrow? Now I had the 100% extension here, which is sourced from the wave 1 low to the wave 2 pullback, and you get a 100% extension of wave 1 versus wave 2, which is appropriate and good and part of the guideline for a wave 3. So we went above it and we just stuck between and we just found resistance below the 1618. So we're hiding the 100 because it's just getting a little cluttered. Now we want to see coming into tomorrow these levels hold. And what are these levels? These levels are the retracement from the wave 2 to the wave 3, okay, and a typical 23.6 to the 38.2% retracement will be our wave 4. Now this could be the A or small A wave, the wave B, and then the wave C. So we could have this completed here, but likely this is an A. We're gonna get a retracement to the B, and then we get the fade to the C. Hold the resistance trend line as support now. Okay, maybe fade below it, trap some bears, and then head on higher because we potentially start filling this gap. But this is the zone that I'm looking for. So support zones 438.39, 436.29, trend channel, sorry, trend line support. Oops. Theoretically speaking, if this is to find support, then our upside targets for the wave 5 will come in at the 618 and the 100% extension. So this is our short-term outlook coming into tomorrow and the following week. All right. So we first have to stop here between the two zones and potentially find a trade that will take us higher into between the 100 and the 618. Now, to that other wave count that I was going to show you guys, okay, this is our bearish interpretation still, okay. This is unlikely, but it's not out of the question. And what do you see here? Now, September the 2nd high, we still have 5 waves down. We retraced 3 waves up, and now this entire wave structure that I'm about to highlight for you is still a corrective wave B pullback. All right. Yes, you must be saying to yourself, bro, when are you going to give up with this bearish interpretation? Did you not see what the markets did today? And I'm aware. I am fully aware, guys. But as I mentioned to you guys previously, a good Elliott wave count should always carry 2 wave counts, alternate and preferred. All right. That's just in the likelihood if your preferred interpretation goes the other way around, then you fall back into your alternate. All right. So you're always navigating the waters with a roadmap. You're not blindly going somewhere. So our resistance and our upside targets for the wave B pullback comes in at the 786, 618, 448, 444. Now, let's do something real quick for us right here, okay? Both of them are in 1 hour time frame. Let's take a look at where these two will compare and what sort of similar levels will likely have to see hold or break above. Okay, now, this will normally be, when we complete the substructure here, this will be the wave 1, all right? Then the wave 2, then wave 3, then wave 4, wave 5, so on, all right? So the wave 1 will come to completion between a theoretical 451 to the 445. What do you see here for a wave C pullback, all right, or wave B rather? 448, 444. So you will see, we see that there is some sort of area here that at which point both of them will find resistance at equal levels, okay? Not the exact same ones, but within the same range. Now, it's at which point here, is at this point that we will see if this is the real wave count, okay? Because how do we know? How will we know? We will know when we see, you guessed it, 1, A, B, and C, all right, to fall between the 38.2 or 38.2. Oh, this 3 doesn't work, right? 38.2 and 23.6. Fib zones, 23.6. All right, that's where we want to see an ABC pullback come into play. If we hold those levels into coming into next week or the following, whenever that happens, and we start breaking higher, then guess what? This is not the count. And this is the count. And we are gearing up for new all-time highs. All right. So always remember, and the reason why I am favoring our bullish count at this point in time is because it falls in line with October, November, December, which are our bullish months for the stock market. Seasonality, or seasonality speaking, if you will. I don't know. Maybe that's the term. But historically speaking, that is what those months are for, or those months entail. All right, guys. So keep in mind, this is our bearish interpretation. Likely, unlikely to happen, but we want to see this break above after we do a 3-wave pullback. All right, so let's get that out the way, and let's take a quick look at the cues. So the cues here. So we did the wave 3 completion on September the 2nd, right? We went down in 5 waves to the wave A, wave B pullback into the 618, appropriate, and then we did a C wave down. So now you see here. Okay, if we take a quick look at the wave A versus wave B, all right, you see that a wave C was exactly the 100% extension, or a little bit beyond the 100% extension of wave A versus wave B, which is appropriate. So that gives me a bit more confidence. And we have, actually, let's stick to the daily time frame. All right, then we have the trend channel that is sourced from the wave 2 to the wave 4 to the wave 3 to give us a theoretical wave 5, which is somewhere up here, back down to the 1 hour time frame. All right, so the way we're looking at this, ladies and gentlemen, is that off the October 4th lows, we went up in 1, 2, 3, 4, 5, completed wave 1. We want to see support at the 23.6 to the 38.2, which will fill this gap lovely and beautifully, right? So the 362, 359 area is our level for support, at which point, theoretically, if this is the support at 38.2, then the wave 3 will get us to the 100% extension of wave 1 versus wave 2 at 376.31. All right, guys. So that is it for me tonight. Okay, I hope you all had a fantastic trading session. If you like the content and you enjoyed the video, please give me a thumbs up, subscribe to the channel, and join Trending Waves. The link to the Discord group will be pinned down in the comment section. As always, thank you so much. I shall see you guys tomorrow. Bye-bye.